Our guest today is influential thinker, author, and economist George Gilder. He's co-founder of the Discovery Institute. He wrote the international bestseller Wealth and Poverty, a book that made him President Reagan's most quoted author. In 2013, he published Knowledge and Power, the information theory of capitalism, how it is revolutionizing our world. His latest book is The Scandal of Money, Why Wall Street Recovers, but the Economy Never Does. It's great to have him on our show. Thanks for joining us.
Thank you.
First, can you explain briefly the information theory and how you believe it impacts the economy and financial markets today?
Sure. The essential insight is that can be summed up that knowledge is wealth, and wealth is knowledge. Cesar Hidalgo, economist at MIT, put it this way. He said, when an expensive car crashes into a wall, all its information and value disappears, even though every molecule and atom remains. Value is information. The car is knowledge. And I've extended this proposition in my earlier books and in The Scandal of Money to all economic growth. If wealth is knowledge, growth is learning. And as we know from all the business consultancies, the learning curve is the most well-demonstrated phenomenon in business. With every doubling of total units sold, costs tend to drop between 20 and 30%. Learning is growth. Growth is accomplished by businesses performing entrepreneurial experiments. And they can only yield learning and growth if they can fail, if bankruptcy is possible. And so learning has to happen in a free economy.
Okay. So
and the scandal of money is that there's no measuring stick to judge the learning. The money has become an chaotic expression of currency trading that is far less reliable and far more volatile than the actual economic activity it's supposed to measure.
How does this affect dishonesty, if you will, whether it's on the corporate level, Wall Street's level, or even the government's level in terms of how it reports statistics and the like?
Well, if the measuring stick is constantly distorted, all the statistics become what I call Pravda money. They're just a guess at what things might be worth rather than any measurement with a root in actual values in the world. And that's why since 1913, when the Fed was created, if you had $1 million of paper money, it would be worth $20,000 today. But $1 million worth of gold would be worth $60 million today. So gold holds its value. But what's happened now is Bitcoin has emerged mimicking gold. The Bitcoin blockchain allows the creation of a new 21st century kind of gold standard. And once again, we can have monetary values rooted in the real world rather than just notional values invented by central banks.
Certainly, certainly. You know, in the last 3 decades between the publication of Wealth and Power and Knowledge and Power, a lot has obviously changed. What do you believe is the most important change that everyday investors need to know about and understand?
I think the emergence of the information technology economy. All information theory is the foundation of the whole internet, computer science, And I believe it can be extended to all economic analysis. This is information theory that identifies information as surprise, as unexpected results. And the notion of information as surprise allows you to incorporate entrepreneurial creativity in an economic model. And, you know, creativity always comes as a surprise to us. If it didn't, we wouldn't need it.
Sure,
and
sure.
Socialism would work.
So in the last minute we have left right before the break, you know, how does the average person looking in this information age at the preponderance of information data available, how does this person know which information to focus on that is correct and which information not to focus on that might be marketing hyperbole?
Well, basically, information is unexpected development. So when you get numbers that diverge from what is expected, it probably signals some information being issued by the market. And that is the basic rule of information theory, that you have to really understand the specific companies. You can't measure the stock market with an oscilloscope measuring ups and downs of the overall market. You gotta look at individual companies with a microscope that can yield the surprising data that signals big new opportunities.
I've got you. Well, listen, we're going to take a quick break. So, George, I know you're going to stay with us. And for our viewers, you stay with us also. We have a lot more questions for George and a lot more about helping you determine how to be brutally honest with yourselves in managing your portfolio. We'll be right back. We're here today with George Gilder, author of The Scandal of Money, Why Wall Street Recovers But the Economy Never Does, an overall well-informed investor and economist. George, you know, for the average American today, working just for simple goals toward a secure, happy retirement, do you believe that achieving that goal is more challenging today than it was for earlier generations?
I do believe that it's harder because of the chaos of currencies. Today, replacing any real standard of value is currency trading, and currency trading is now $5.3 trillion a day. That's 73 times all the world's production of goods and services. It's 26 times all world GDP. And it's a scandal of money because it doesn't even yield a reliable currency to measure the learning curves of the real economy. So, and the government, moreover, doesn't want you to buy anything that you know about. And it's the government believes that the best investment is the state lottery in general. And what's happened is that President Obama has combined with the Fed to effectively nationalize the banks, and through the banks, nationalize our economy. It's the major transformation that he promised, and he achieved it to a great extent, and it makes all stock market values deceptive. It creates a closed-loop economy between Wall Street and Washington, with Main Street shoved aside.
And of course, that's a great example of governmental dishonesty, you know, layered on top of the unprecedented levels of Federal Reserve influence and so on. But what would you say is the most egregious, more recent example of corporate dishonesty in general. And I'm not talking about specific corporations, but in general, the most egregious example of corporate dishonesty?
Well, I think it's enforced by the government. I think that this, the behavior with real estate before the crash was a gigantic corporate deception inflicted on corporations by the federal government, by the FHA, Federal Housing Administration, by Fannie Mae and Freddie Mac, by the Community Redevelopment Act, all these massive programs dictating that banks invest the savings of America chiefly in real estate, which is, and so what we did was we bid up existing assets by borrowing from the future, by impoverishing our retirements and our children and our grandchildren. And that is a gigantic dishonesty, but it's a scandal of money that's enforced by the federal government.
And George, I guess you could say the same thing about today's unprecedented levels of corporate share buybacks, correct? Borrowing from the future to inflate values today?
Well, if 62% of the Fed's new money goes directly back to the federal government, 2/3 of the remaining money goes to the S&P 500, which uses it at a rate of some $25 to $30 billion a month to buy back their own shares and buff up stock market values, but not do real investment with a yield for the future. So I think that's a further scandal of money.
Yeah. Do you believe that a lot of this has to do with the government and Wall Street being too short-sighted when it comes to what's best for them or what's best for our country?
No, I think we have had a covert socialization of the American economy. The banks around the world have been assessed penalties and fees of some $300 billion. They can't move without consulting the government. And the government's zero interest rates zero out the future. When anything is free, like zero interest rates mean money is free, only the people on the front of the line get any. It has to be distributed by Q, as David Malpass said, and only the people in the front of the line get it. Main Street and even Silicon Valley is largely left out of the loop in this closed-loop economy.
Now, as you know, on today's show, we've been talking a lot about the importance of honesty and saving when it comes to specifically retirement investing. So as someone whose work focuses a lot on ethics and morality, do you have any final closing thoughts or insights that you can share about this topic for our individual investors?
Yeah, I think that you have to understand that capitalism is not some arbitrary system. It's based on discovery of truth. And that's what the market does when it's allowed to function. It reveals the truth about business plans. It enables learning. And deceit is destructive to capitalism, and pravda money is the form of money that the government is offering. They manipulate money to create an image of growth, but that is not translated into real yields in the future and real learning that constitutes growth.
George, we have to leave it there for now. I apologize. We are out of time, but I really want to thank you for being part of our show today. Thank you.
Thank you. I appreciate it.
And stay with us, because when we come back, Morgan and I will give you specific tips about how to determine whether you have the internal resources, teach you how to be brutally self-honest, to do your investing all by yourself, and or questions you can ask your advisor to determine if he has that sense of brutal self-honesty. We'll be right back after the break.